LeBeau, and welcome back to the Fourth Revolution, where I talk about stocks for your portfolio of the future. Today, we're talking about Wall Street Bets, a Reddit blog that is driving the markets. And Jim Cramer is saying that this blog has more power than any one Wall Street firm. And I honestly am starting to believe that with what I'm seeing today and yesterday with GameStop. So GameStop added three new board members based off of RC Ventures, managing principal Ryan Cohen's recommendation. They're a huge shareholder in GameStop. So it started out as a short squeeze that drove the stock up, 20%. And then these guys on Wall Street Bets heard one hint of bullish news, and they drove this stock up over 100% at some point yesterday. And the stock closed out at over 60% and is even higher today. I think we're up close to 10. You look through Wall Street Bets blog and what everybody's saying, no one has any due diligence. No one has any fundamental idea of what's happening. They just like the idea that they were right, and they keep saying buy GME, buy GameStop, and they're 1.8 million degenerates is what they call themselves, and they tout that they're degenerates. They tout the fact that they don't really know what's going on and are still making money. And it's interesting. You continue to make money in this market not knowing anything if you ride the waves. So you just don't want to be caught at the top holding the bag when everything turns south. So let's take a look at Wall Street Bets blog and what's really happening behind the scenes here and how sustainable it really is. Is Wall Street Bets making waves, or are they making bubbles? Wall Street Bets has been touting GameStop for some time now. And I think they've driven a good amount of this volume. The market cap's only 2 billion, or just over 2 billion after this spike. So having 1.8 million people pushing the stock further and further up is not a super difficult deed. And there's been a lot of institutions that have been shorting this all the way up. I think I saw a short interest above 30%, which is crazy. And yesterday's short squeeze really pushed a lot of them out. But there's still a lot of institutions that are betting against it. And the thing is it goes back to the old, John Maynard Keynes's quote of the markets can be irrational longer than you can stay solvent. So that is something that I'm concerned about. And, these Wall Street Bets guys, they have no interest in learning the fundamentals or even the technicals of what's going on with the stock, because what they're doing is working. When they say, let's go in and buy this stock, 1.8 million degenerates will go in and buy this stock and it'll drive it up like we saw today, even and yesterday. The stock's up over 10%. And it's working for them. They're able to drive returns, and they love the idea that they don't know what's going on and are still making money. I saw somebody, they put down $500 early yesterday on open on some calls that were expiring on this Friday the 15th, and they turned that into over $50,000 in a matter of like 4 hours. It was crazy. And these types of returns are being seen across the board, especially in penny stocks. Penny stocks are not hard to manipulate, quote unquote. I don't want to use that word too derogatorily, because it's a blog driving this. But if you get enough people in a penny stock, they're gonna drive the stock up. It's just a matter of supply and demand. Palantir was another stock that really got wind of, or should I say, Wall Street Bets got wind of Palantir here in November and drove it to ridiculous levels. You can see after its IPO, it was trading right around $10, a little bit below that. And I thought this was undervalued. This was a great buy right here at under $10. But once Wall Street Bets got wind of it, they made all of their memes about it. People kept driving it up and up and up and up, all the way up to 33%, over 200% returns in a matter of a couple weeks. And I guess really at the end of the day, you just don't want to be caught holding the bag. Somebody buying up here, they've probably lost a significant amount, because these guys are buying calls And when you're buying these types of calls, you have a lot of risk on the table, especially when your calls are expiring in a day or two. So you see these outrageous returns, and you also see outrageous losses, which they tout just as much on this blog. Tesla is another stock, and Tesla's a little bit different because we do have some institutional backing. We have, Goldman calling this a buy at, I think they had a price target at about 800. And institutions are backing this, but this is still a meme stock, and there's still a lot of fresh cash from these retail investors on WallStreetBets going into this stock and driving it higher and higher. And Virgin Galactic, ticker SPCE, it was another example of that. People love the idea of going to space, and the generation that's on WallStreetBets, which is mainly millennials and Gen Zs, they drove this stock to unsustainable levels up here. And like I said, you don't want to be caught holding the bag at the top. You can make money all the way up, but there's no way to time when we're going to peak and when we're gonna trough. So the Wall Street Bets blog is reminiscent of what happened in 2019, right before the dot-com bubble popped. There was all these chat rooms and different blogs telling people what to buy and driving stocks up to, unsustainable levels. You saw Cisco and Intel hit their all-time highs, and they still haven't gotten back to those levels that they got in the early 2000s and late 1990s. So this is something to be aware of. Obviously, this euphoria could last for 6 months to a year from now. But right now, there are bubbles being created in the market, and this is something that you should consider when looking at investments. There's a lot of euphoria, a lot of mania, and with this stimulus expected to continue to be rolling out from this blue wave that we're seeing, I think the euphoria could continue into spring. I'm looking for a pullback in early spring once inflation becomes an issue, and once inflation becomes the issue, there's any hint of the Fed raising rates, that this tech bubble is going to deflate. It's because the discount rate of all these stocks is going to rise, and the valuation is going to fall. So thanks for watching, guys. Don't forget to check out Zacks.com/promo for our latest promotion, and look forward to speaking to you guys next time.